Welcome back to the program. I'm Zev Brenner. It's time for Lumi Financial Quarter. With us once again, Michael Zaremsky, head of U.S. Private Banking, Bank Lumi USA, member of the Investment Committee for Lumi Investment Services. Good to speak with you again.
Great to speak with you, Zev. Hope everything's going well.
Thank God. So here is the number one question, which, Michael, I assume you're probably hearing all the time. This inflation was supposed to be temporary, but it seems to be keep going on and on and on. When is it going to end?
That's a great question, Zev, and you are correct. It seems to be one of the leading questions that we get in most of our client meetings. And let me first say that the views expressed on this discussion are my views and not necessarily those of the bank or the broker-dealer. The Fed has been telling us for quite some time that inflation is transitory. And I think one of the key things that we need to understand is, one, the Fed has the ability to determine the definition of transitory, the time frame of transitory. So they're kind of the judge, jury, and executioner on the terminology. I will, however, say that I do think that there is a big disconnect between what an economist's view of inflation is versus what a layman's view of it is, or normal household people that are seeing rising prices across the board, particularly in things like energy, automotive, and households. So I use those three themes because ultimately, at the end of the day, those are the three items when you break up the basket of what the Fed considers for inflation. Those three items really are the majority of what's making up the current inflation that we're seeing in the CPI and the PPI and all those different indexes that people quote. So I think that what we have to do is take a little bit of a step back and try to understand why we're seeing what we're seeing, why it's persisting, and when theoretically we may see some relief. So a couple of the things that we've talked about quite a bit is the three main themes that we've talked about. Again, the intersection of fiscal policy, monetary policy, and COVID. And those have been ultimately the main drivers. And if you were to put like a red light, green light, yellow light on those right now, fiscal policy, again, we've seen a tremendous amount of stimulus come into the markets. Corporations are flush with cash, households are flush with cash, and there's a tremendous amount of pent-up demand and money that's come in because, again, fiscal policy has been really, really accommodative. In addition, what makes that even more of a flashing green right now is because of the relative balance in Congress, particularly the 50-50 Senate, with Senators Manchin and Sinema being holding the line in terms of how much spending and how to pay for the spending. Most of the worst case scenarios that people envision for tax increases have been put off the table. Kirsten Sinema has been resolute in holding the line on corporate and personal tax increases, and therefore expectations that we'd see a pretty significant hit to incomes because of tax policy have been put off the table. Again, any deal on infrastructure and reconciliation is still out there. We'll see what happens. But the worst of the tax issues have come off the table. So fiscal policy is really positive in this vein. Monetary policy, the Fed is, I think, done, generally speaking, a masterful job in guidance, in directing everybody in terms of what their plan is, where we're going, and how we're going to get out of the massive accommodation that they've put in front of us. The market seems to have accepted the fact that tapering is going to start happening, whether it's November, December, January. It seems like it's coming. And again, that will start the process of starting to slow the pace of accommodation from a monetary standpoint. And the last factor we see is COVID. And over the last few weeks or so, you seem to see the waning of the Delta variant. So again, most indicators seem to see big downtick. We probably have hit the peak. We're on the way down, and we'll see where that goes. But what all those three elements are doing is pointing to the fact that we seem to be heading more and more towards recovery. So now, Zev, the question is, what does this mean for inflation? And the problem right now is we have so much demand. Much of what we're talking about in the news now is the supply chain issues. And the supply chain issues are really driven right now, not because there's really truly, let's say, a supply problem in a sense. It's really because there's so much demand. In the United States right now, the pent-up demand that we've seen, the amount of cash that's on household balance sheets is all demanding more and more goods and services. And ultimately right now we have a shortage particularly in the, let's say, the port system, whether it's, labor, so crane operators, whether it's truck chassis to onload, offload, and move the box containers out, whether it's drivers. So again, there's a lot of these supply chain problems that, in my estimation, price and markets are a really good mechanism to help solve this. So ultimately, what we do see happening is that the pricing mechanism will start to work itself out. Again, wages going up to get more people incented to take the jobs, more overtime. I would also assume that we'll probably get some regulatory relief that will probably help this. Oil and the energy patch is another area. We don't have a shortage of oil and energy like has been feared in previous times when oil prices have spiked. But again, it's a little bit more of an issue of the price mechanism and regulatory issues. And as prices stay high, one of the old adages is that the cure for high energy prices is high energy prices. And the expectation is you'll see more pumping from OPEC, you'll see more pumping from the Permian Basin in Texas, and eventually these things should work themselves out. So to go back to your original question, how long does it last? What is the definition of transient? I think somewhere along the line the Fed will tell us, but what we're looking at, and my belief is this isn't a typical monetary inflationary cycle like you saw back in the 1970s. This has to do more with supply chain disruption. And again, whether it's a month, 3 months, 6 months, a lot of elements of these will start to wane.
I think we're all looking forward to that because people, I guess, are as sick as inflation as they were of COVID, right? So they're waiting for it to pass.
Yeah, but Zev, it's an interesting scenario in that as prices are rising, at this point, you haven't really seen a slowdown in demand. And that really, in my mind, speaks to the strength of the economy as a whole. And you're also really seeing a lot of that in some of the recent earnings right now. One of the questions that people have is how long can corporate earnings continue to stay strong? How long will those margins stay where they are without compressing? Can they pass these price increases on to consumers? And the cost of a hotel, the cost of an airplane, the cost of an entertainment event, those things are rising and people are paying them. And for anybody that's traveled recently, airlines are full. Again, they may have a shortage of pilots, they may have less planes, but they're getting the prices that they're putting on the tickets. If you want to go on a vacation into a desirable destination, the hotel prices are extremely high, but the hotels are full. So again, maybe they have some less capacity, but again, their prices are getting met. So I believe that a lot of this will start to work itself out, particularly as some of the supply issues, again, work themselves out with more demand coming on stream. And again, more and more of the boats getting offloaded, which a lot of this stuff will start to happen.
We're looking forward to that, that's for sure. I want to thank you, Michael Zaremsky, head of U.S. Private Banking, Bank Luma USA, member Investment Committee for Luma Investment Services. Thank you for joining us again. Look forward to our next conversation.
Thank you very much, Zev. Always appreciate it. Have a great week.
And we're going to be right back. Don't go away. Stay tuned.